Welcome to Commodities, and here we're looking at gold here, and our nice third wave is still pushing to the upside and should continue to do so. So let's drill in and have a look at this as such. But you can see this is a nice third wave here, so we've got the fourth wave here and the fifth wave up through here. So we will have corrective patterns across the top of group 1. This is minor group 1 here at 1300, so 13, oh, we're past that. That's midpoint, so let's go and check that out here. Okay, we've got our fourth wave here, so we're looking for our fifth wave up here, but it may not be that high, but let's just go and have a look. So we're looking at sort of counting 5 waves in through here, and once that's done, then we'll be looking for a larger wave 4 and then another fifth wave up through there. So in this little wave 4 here, yes, I mean, we could put wave 1 here as such, but I think it's a better count of 1, 2, 3, 4, and 5 into here for wave 1 and 2. So we're looking for wave 3 to move up. We can look at wave 3 just quickly by looking at the extension here. So we can look at wave 3 up at here, wave 4 to here. It may move further than that, but it's a good starting point. And then wave 5 up through to here. So I think I've got this, this should be in black labeling here as well. Let me just double check on that. Oh no, that's okay, I think. No, yep, that's okay. It's still got a fair way up, so this will just make wave 1 and wave 2. So support on top of 1330 here, which is the top of subgroup 1, minor group 1 here at 330 is the subgroup 1 here. So support here, which we've got, would see this market push up to support here sets the target at 1350. Yes, you do have to navigate 1340, and it's always an opportunity to buy after a small correction is been completed there. Yeah, so it's just got trouble at profit taking number 8 here. Once that's done here, then once this is corrective here, so yes, it may come down here further, but it is corrective, so it will break to the upside. So you can look at this as some sort of channel, sort of corrective pattern through here, but continuing up from there. And silver's the same as well. We're looking at the classic trading levels pattern through here in terms of the arrival, the reaction, the first high above the level, then an A and a B and a C, and then further upside from there as well. So yeah, probably better with gold. Gold's leading to the upside here. The copper here has become a little bit weaker, but it's found its feet here. You can see that it's dropped a bit sharp down through here. There's some very large copper and gold and silver mine sort of re-establishing itself. I think there's something like 19 billion tons of copper there that can come out of the ground. So that may have been the reason for this, I'm not sure. But look, the main point here is that as long as 320 remains as the support through here, then this has still got the possibility of moving up here further, even though it has been struggling a lot since we've been, poking around at the 330 up through here. But the move that we've got here so far, from this point here at least, is an A and a B and a C here, pulling back to the 61.8 retracement level of this whole move up through here. And yes, this can be counted in different ways. You can make it fit either way you want, but let's just stay with it. As long as this 320 holds here, 322 holds here, then we can look to the upside. It still could count with one more leg to the downside as well here, in terms of an A wave, a B wave, and then 1, 2, 3, 4, and 5 here, and then push up from here. That's why, as long as it stays above the 320, then it's positive to the upside. The oil market as well. Looks like we've got a bit of a B wave here, but I think, I'm not sure where we were last time we spoke, but we're looking for wave 4 in here, so that's fine. We're looking for this to continue to show 5 waves to the upside as such, the 1, the 2, 3, 4, and 5 here. So still more to go here, but once again too, this is the top of group 1 here. 3 is always top of group 1, so it really needs to establish support on here before it goes further to the upside. But the classic trading levels pattern would be the arrival the reaction, the first high above the level, then a corrective pattern, and then further to the upside like that. Just having a look at Brent here. If I just bring the Brent chart across here just for a moment, it's probably a little bit sort of cleaner in a way, but you can see that this is all corrective here. So this is still looking for this move to the upside over here. So up for 1, back for 2, the 3, 4, and 5. So it hasn't pulled back as much as the Western Texas there. So it's all looking still looking pretty good to the upside. The gas market that we've sort of pulled in a week or so ago, just doing a bit more work on the chart here. But look, basically from this low down here, we've got 1, 2, 3, 4, and the fifth wave happened last week very quickly, which is good, and to the medium level 650, and then it's pulled back here. So we'll be looking at an A and a B and a C wave to here, and then we'll start looking for trades on this side of the fence over here. But we just want to see a nice 3-wave correction here, which will take, well, let's just see how long it takes, and we'll take it from that point there. But over here we'll be looking for something on the long side. The soybean market is cruising along very nicely indeed, and is heading up to the 1400 here. Now with the wave count here, I don't know if this is wave 1 here and wave 2 here, or we're going to have wave 1 like the indices up here as such, and then wave 2 over here. I'm not sure about that. All I can do is track the internal wave count and be mindful of where the orders are going to be sitting, as such as the 1400 here. So it's just the weekly chart here, so we don't need to go there. So on the count from the low here, looking at this being 5 waves up to here for wave 1 and wave 2, and then I was counting this as 1, 2, 3, 4, 5 for wave 1, back for wave 2, and then the third wave here. And one of the reasons for that too is you can look at this 5-wave structure here, and you can see how much bigger it is than these guys here. You know, these are big sort of moves and corrections here, where these are small. So it's basically expanding to the upside. So that's why I'm counting it in this particular fashion here. Our strategy is still the same, is to add at every 10 points. So just continue to do that. Keep them very small though, because we've got a long way to go. And, you know, whatever happens, it might be we have to expect some type of correction here, either before here in something like this, or it could have something small here and then move up here, and then have a corrective pattern down back through here as well. But in one way or another, we should accept and expect some type of corrective pattern across here. But once that's completed in one way or another, we'll be looking to go long on this support, looking for signals through here, through group 1, which would be 10, 20, and 30. We just want to see some type of correction. And it's good to have that correction too, because it gives you a foundation. If you've got that foundation, then you've got more trust in the next trend. If it doesn't have that foundation and just keeps tripping to the upside, yes, it could be parabolic and continue all the way up, but you can also run out of steam. So slow and steady is the way to go, and working off a nice corrective base foundation is very helpful as well. Okay, the wheat market is, you know, we've had to navigate through the 600 here. It hasn't been too much of a problem. Now, I'm not going to put I can lift the stops up to this point here, but I'm not going to do that just yet. We'll keep the stops just under here, but we'll also look to add on this new high here as well. So 620, 50 or 30 or something like that, whatever you can get at that point there. But keep the stop way out of the way just here for a moment. Let's drilling into that here. The wave count is looking very good. So we're looking at wave 1, wave 2, and then in wave 3 here in green 3, we're looking for 1, 2, 3, 4, and 5 up through to here. So in fact, what I can do here is, I think is, me just check on the intraday here a bit further. Still in this one here. So, all right, not quite there at that third just yet. We're still in the third. We were looking for the fourth wave back in the last video. That's come in nicely now, and yeah, we were looking for it here, but then it moved down here, but we still kept it in play, and good that we've done that. And we're looking for this wave 5 up here of wave 3. So if you've been trading, there's got two strategies running here, the weekly robo, which will probably flip over into a larger robo strategy a little bit later on in the piece. But if you're doing the trading levels one, the idea was to trade to the 630 here. But if you want to sort of hang on to that, you can trade to the 650 here, because we've still got more waves to go to the upside here. Right, corn. Kind of doing everything we expected it to do. There's been a bit of a report about some oversupply and good harvest and all those sorts of things, and that's why the reason fundamentally it's come down through here. But you know, we're expecting some type of corrective pattern across the 450. We've got kind of an even amount above and an even amount below, not quite, but near enough. So we can see it. So what we're looking for here, though, we've only got one move down through here. We're looking for 3 waves across here, and it can come back to this 440 here, the wave 4 of 1 lesser degree. But anyway, let's just allow this corrective pattern here to play out, and we'll be looking to go long as well. Keep adding to this position once again every 10 points as well, moving to the upside. I do have to point out and remind ourselves is that the move up that we have here from this low here, this 2-year low here, is that we only have 3 waves to the upside. So up for 1, back for 2, and up for 3 here. So technically it can be a corrective bear market rally in 3 waves, an A, B and a C wave. That's why I've got the alternative C wave here. So this can fade and die from here. Okay, so we need to be mindful of that, but I'm playing it to the upside. And as I mentioned, if you were concerned about this, then if you had positions in through here, then you need to exit at 450 and wait for support over here. Otherwise, if you've traded correctly and you've used very small position sizing, then you should be able to breeze through this and hold those positions there. All right, orange juice. Okay, now with the orange juice here, look, long as we stay below this, above this current trend line low here, then everything's fine. And what we're looking for here is a 5-wave structure up through here. I think this is wave 4 here, and we'll look for wave 5 up into close to the 150 or 148 above there somewhere. And then we'll look for another reaction pattern coming from this area up here. After we've got that, because this will be basically up for 1, ABC, back for 2, and then moving up from that point there. So that's the way we're treating it. Let's just drill in here a little bit through here. So this is, I don't know if this is 1, 2 here, or this is 1 and 2 here, or so forth, but this does appear to be a 4th wave here. Let's just see how it travels. And technically, if this is an impulse wave up here, then we want the market to stay above the 143. So the 142 is resistance, or this area's resistance would be a bearish signal from that point there. So if you have longs in, then you would be looking to exit from that point. Otherwise, we'll be moving to the upside. And in moving to the upside, we would be looking at a little 5 waves coming into play from here, well, up to this point here, and then a reaction from here coming back and then up. All right, cheers.